Corporate Finance Excel Practice Problem. In this presentation, we're going to work a practice problem in Excel related to a schedule of cash receipts. Get ready, it's time to take your chance with Corporate Finance. Here we are in Excel. We have the information on the left-hand side. We're going to put that into the blue area into our worksheet on the right-hand side. Information will include credit sales or estimated credit sales. In other words, we're going to actually say that the September credit sales are those that have passed in the past. We're going to be looking at the estimated activity for October, November, December, the fourth quarter. In order to do so, we will need the credit sales that happened in September. So these are credit sales, meaning we didn't receive cash, or we're estimating we're not going to receive cash for them. We're going to be having them on account. You can imagine basically giving an invoice to the customer, expecting to be received money in the future, therefore running through accounts receivable. And then the average collection, we have to think about, well, if I'm going to think about cash flow in the future, and I have credit sales that we're going to be making, then we have to determine, well, when are we going to pay, when are we going to receive the actual payment on those? So remember, we're saying, okay, September has already passed. We're looking at the fourth quarter, October, November, December, estimating these sales not for cash, but for credit. And then we have to consider what's our average time that we will be receiving money on those sales. And that's going to be down here where we have the percent collected in the month of the sale. So we expect that even though these were sold on account, we're going to be collecting within the same month 45% of them. So we made the sale on account, sent out the invoice, and we expect to be receiving the payment within the same month for 45% of the sales. Percent collected in the following month. So 50%, meaning we sent out an invoice. Typically, this is based on past performance when we're projecting out into the future. We're estimating that the invoices we sent out, the accounts receivable we have, are going to be paid 50% of them in the following month as to the month that we entered the data, entered the invoice. In other words, we record the sale in the current month or 1 month, and then we don't get the cash until the following month. And then we're saying that 5% is going to be uncollectible. We're just not going to collect on them because we're not going to be able to. We're going to try to collect on them. But estimated based on past history, 5% of the sales, uncollectible. If we add all these up, then of course, that'll add up to the 100%. All right, so let's put together our worksheet. We're concentrating on the cash flows. We're concentrating on the cash flows for the fourth quarter, that being October, November, and December. But in order to know the cash flows, we're going to need the prior month. And this is going to be the confusing thing with these types of schedules when we're thinking about cash flow, because there's a lag between when we record the income, the sale, and when we get the cash. And we're going to be basing our information in different scenarios on the prior periods or the following periods. And so it can be a little bit confusing that we'll have to add that data so we can do the proper projection. So what I'm going to do is we're looking at October, November, and December, but I'm going to add September so that I can add the information that it will be necessary within our schedule to make the schedule nice and neat, rather than pulling information outside of the schedule, so that we can then focus in on the 3 months for the fourth quarter, October, November, December. So we're going to say, all right, the credit sales, these are the credit sales we can imagine actually happening for September, because we're imagining September has passed, or close to it at least. And then October, we're projecting out 43,000 credit sales. November, we're projecting out 39,000 credit sales, and December, 62,000. All right, then we're going to think about, okay, that's our sales that we're going to sell on account that are going to go through accounts receivable. What about the receipts of the money that we're going to get paid for? Now here, I'm not going to be looking at September because I'm looking at the receipts. I'm trying to figure out that just simply for the fourth quarter. I'm only going to put the information for September needed in order to calculate the information for the fourth quarter. So we're going to say then that in the month of the sale, we're going to collect 45% of it. So we're going to say, all right, I'm not going to do September because we're not focusing in there. We're going to say this equals the October sales times the 45% that we're going to be collecting in the same month that we had the sale. And then we're going to say that, well, we could do this all the way across. I could do this all the way across. This equals the 39 times the 45%. And this equals the 62,000 times the 45%. Now, it's useful to practice our Excel skills here. Could we do that easier? Could we copy and paste? We could, but we need to do a little maintenance before we do so. To show that, I'm going to delete these items just to show you the Excel if I double click on this and I was to imagine copying the formula over, then it would move over the cell. If I copied the cell over to here, the formula, it would move both cells from here to here, which I want, but then it would move this one from here to there, which I don't want. So I want to make this one an absolute reference. You could make it a mixed reference. That's all you need, but I'm just going to do an absolute reference here. So this one's in cell B8. So I'm going to put my cursor on the B8 one. I'm going to select F4 on the keyboard, which puts a $ before the B and the 8, or you can manually put a $ before the B and the 8. That will tell Excel, hey, don't move that cell when I copy it over. Like, keep that one where it is. It doesn't have anything to do with actual dollars. It's just, that's what they use. So then I'm going to use the autofill, put our cursor on the fill handle, and autofill all across here. Double check that it does what we want by double clicking on one of them. It does. So we're done with that. Then we're going to do the next item, which is going to be in the month after the sale. So now this is where we're going to have to take into consideration what happened in September, because we're going to say that September sales happened of the 60,000. I'm focusing on October, November, December, but we're going to collect on some of those September sales in October, the following month, 50% of them. Therefore, I'm going to say that this equals the 60,000. Notice this is what's kind of funny about these schedules. I've got this jagged look, right? I'm looking at October and I'm pulling data from the prior periods in order to calculate the current period that I want to be calculating in. That's what's going to be needing to get used to. All right, you need to get used to that. So then we're going to say this will be equal to that times the 50%. I'm going to do this all the way across, and then we'll do our absolute reference again. So in November, we're going to say I'm going to pick up October's items that we sold in October, that we're going to collect 50% of them in November. And then in December, we're going to pick up the November sales, the prior month sales, times 50% of those items. Then I'm gonna show us how we could do this using the absolute reference. So if we had the whole year of this, we wouldn't want to do it one at a time. I'm going to delete these. We want to use the formulas to do so, or be able to autofill or copy and paste. So if we were to copy and paste, it would move this cell over. It would move this cell over. I don't want to move this cell over. I want it to stay the same. I'm going to use an absolute reference. Could use a mixed reference. I'm going to do an absolute reference by putting my cursor in B10, then selecting F4, which puts a $ before the B and the 10, telling Excel, don't move that cell when I copy it over. Then I'll put my cursor on that. We'll put our cursor on the autofill handle, and then we'll drag it on over, and auto drives it over, and Dr. Phil does the calculation, double clicking on one of them to make sure that it is indeed doing what we expect it to be doing. And that's going to give us the cash receipts then. The cash receipts will then be, I'm going to sum up the columns equals the sum of these two items. And then I can copy this one across, straight across, without doing any absolute or mixed cell reference, of course. So we're just going to autofill this across. Double check that it does what I want on this side. It does. Let's do some formatting. Let's put an underline on these cells, selecting these three. Home tab font group, let's underline those. Let's select these three cells. Let's put a double underline there. Home tab font group and the double underline. That looks much better. So that's going to be the standard process. Whenever we do the cash flow considerations, we'll see that kind of jaggedness in some of these schedules, right? Because we're going to have to project what the cash flow is, which won't line up necessarily to the accrual sales items. We'll see a similar item or activity when we look at the cash outflows versus the expenses.